So we've got Stephen Barkho here with us today. Thanks for joining us today.
Thank you for having me.
I guess we'd really like to hear your expertise, and you've been in the real estate industry for a little while now. Just help out our customers with how the Eastern Suburbs market is going into 2026.
Okay, beautiful. Yeah, so it's been about 10 years now of working in the industry.
Wow.
And I've absolutely loved it.
Yeah.
For me, residential has always been my passion. And the Eastern Suburbs market, from a buyer's perspective, a lot of people are finding the urgency of getting in the market.
Yeah.
Just concerned about rates coming down, being, pushed out, just not getting in.
Yeah.
But then also from ones that are renting at the moment, they're seeing rental prices go up. So they're in that space of, hey, our rents are going up. We need to get in because we're not going to be able to get in later.
Yeah.
Or we're not going to be able to afford to keep renting.
Yeah.
So, the market, the demand is quite there from owner-occupiers to then also investors.
Mm-hmm.
A lot of people in that short-term vacation stay, like vacation management, and they're getting like 3 times the rental as well.
Wow.
So the yields are very good for a lot of investors, the capital growth, especially in the East.
Yeah.
It's been a very competitive market and not that much supply because people are just seeing the growth, so they're just holding on to what they have.
Yeah. So which would you say is the strongest part of the market? Would you say it's more strong in the owner-occupier side, the investor side?
I would say it's stronger on the owner-occupier side.
Yeah.
People in these high net worth properties that just keep growing in capital gain, like capital value as well.
Yeah.
So you see that, and then I would say probably on the apartment side of the market, you see a lot more investors.
Okay.
Yeah.
And, you were saying that there's a lot of people trying to get in at the moment. Are you seeing a lot of people trying to take advantage of the 5% like the 5% first home buyer stuff, or are they seasoned buyers that are coming into the Eastern Suburbs?
More seasoned buyers.
Seasoned buyers. And what do you think, is there a lot of selling going on in the Eastern Suburbs at the moment? What's driving that, if there is much?
At the moment, at this side of the year, being the end of the year, there's a lot of off-market opportunities available that we're working on.
Yeah.
A lot of people don't want to go on the market during that November, December period and maybe be on the market during that break. So at the moment, we are working a lot of on-market and off-market stock.
Cool. And are you seeing, is there much difference when it comes, from the real estate side for you guys in terms of apartments and houses and how that looks differently in the Eastern Suburbs versus, Western Sydney?
I would say the process is the same.
Yeah.
It all comes down to really gaining that connection with the person and if the property is the right fit.
Yeah.
It all turns out, whether you're speaking to someone selling a $25 million house, it's still selling their home.
Yeah. And are you pushing one more over the other, houses versus apartments, or what's your recommendation when customers are coming to you?
Depends on their budget. You need to do the best with what you can.
Yeah.
Ideally, if you can at least get into a semi with some opportunity to maybe add a second story on down the track, you can unlock some further value. But it just comes down to where that person's at, whether, they're in the budget-wise, if they're between that 1.5 to 2.5 mark, it's going to be apartments.
Okay.
Most of the stuff I'm working on at the moment is between the 5 to 10 mark, and that's mostly semis and freestanding houses.
Yeah, awesome. Because I was going to say that sort of comes in for us when customers are coming to us and they're really keen to get into their first home.
Yeah.
But we're sort of on the finance side of it, and there's restrictions around their borrowing capacity, So we're trying to, I guess, not sway customers away from the idea of apartments versus houses, but just sort of, same conversation. What can you afford? So that's cool. And how has your transition into TRG been, and how did that come about?
The transition's been actually really good.
Yeah.
The team is a very driven team, and they're very welcoming as well. I would say going into their environment and just being in that space of a lot of elite performers in that business.
Yeah.
It's an elite it's an elite office.
Yeah.
More or less, I would say, I think me transitioning from selling in the West and selling in the East, it's been still in nature, dealing with builders, developers and so forth. But yeah, it came about, I've been living in Bondi for many years now, and I recently bought last year. And then I thought to myself, you know what, I know my lifestyle's around here and I want to work close to home.
Yeah.
So I reached out to Gavin, had a good chat with him, felt really connected about our vision, his vision, my vision. There was a really good synergy there.
Mm-hmm.
So, yeah, that's how that happened.
Awesome. I was going to say it's a bit of a commute, hey, from Bondi out to Western Sydney every day for work.
It is. I was doing it for about
Yeah.
8-9 years.
Yeah, and now it's like just nice and easy, simple. It would be really good to work close to home, hey?
Oh, I'm at work in 4 minutes.
Yeah, awesome. 4 minutes. That's really good. I was talking to Peter. We were working in the city and it was like 2 hours door to door for me, which is why we've transitioned now to me being in Parramatta. Not quite 4 minutes, but, 30 minutes. It's a bit easier than 2 hours. Yeah. So, no, definitely understand that. And I guess, being in the industry for 10 years, what are some of the biggest lessons that you've learned and would share with your customers?
I would say when you buy something, definitely if you can, unless you're doing it as a project and you have calculated what your returns are going to be, that's one thing. But when you are buying for that long hold, I've always been a big believer of that. Sometimes people buy with the space of 1 to 2 years and then they're trying to recoup their stamp duty that they've paid, their fees and so forth and their holding costs.
It's really just not enough time, hey?
No, you need the life cycle of, that 7 years to 10 years to actually really see how fruitful your investment can be. And buying something that really meets your requirements, sometimes I feel like people do overshoot themselves. They're like a couple and they buy like a 4 or 5 bedroom house and I'm like,
oh yeah.
Don't get me wrong. I feel like sometimes depending on having that a bit of a balance as well so they're not too financially stressed.
Yeah.
Keeping a good balance of getting what they want, but then also having a good lifestyle as well.
Yeah, awesome. And last question for you. Any advice for investors thinking about getting into the market?
Be proactive. You really need to be working with someone that's going to, sort out your finances, the right accountant, and just being active. A lot of times people sit and they don't enter the market and then they just see the market continue to go up and up.
Yeah.
And then they come back a year later and they're like, oh, it's gone up 8 to 10%. And you're like, well, that's what it does.
Yeah. Yeah.
Just get in. And at the end of the day, Aussie property is a safe bet, in my opinion. So, and it's worked well for a lot of people. So,
yeah. Cool. Awesome. Thanks so much for joining us today and sharing your wisdom with us. You've been in the industry for a long time, so it's really good to have you. And I'm sure our customers will be really grateful to hear the information and hopefully take down some notes for their purchases. Thank you.
Thank you for having me.
Awesome.